I'm going to walk you through some live trades where I made some of the biggest trading mistakes there are, with the goal that you will become a better trader from my mistakes. So the first big mistake is not following your trading plan. Now I know this can seem really kind of just basic or really obvious in a lot of sense, but following your trading plan day in and day out actually can be really hard at times because life can throw a lot at you. And so for me, this was a Monday when I came back from kind of being sick and had a break. And it can be hard to kind of jumpstart things back into your trading plan. And sticking to that is the number one key thing for success in trading, because the idea is that your trading plan over time will play out in a positive light. You can't let times when you're nervous about a spot or a trade let you shy away from taking that trade. And so for a good example right here, I had a trade here that I was really interested in because I thought it looked like a really good spot. We had a strong level here where the market had bounced quite a few times. The market then opened, made a breakout of that level and failed and came back in here. And then from there, it came back and retested this level. And for me, that's a really strong reversal setup, I would say. And you can see here I have my stop, my profit target already thinking about this trade. And I got nervous and I didn't commit to taking the trade because I was scared of being right or it being too big of a size or being too big of a swing, thinking that, oh, the market can't swing up that high. And I ended up just skipping out on the trade. And if we zoom forwards here, you can see that the market did chop around a little bit at this level, but it inevitably went all the way up into my profit target if I did get in the trade. And that can be very frustrating for when you are trying to follow a trading plan, because it can eat away at your confidence of following that plan. And for this specific day, making a mistake like that can affect your next trade or your trades for the rest of the day or the rest of the week. If I skip forwards here to another spot, you can see we have this level up here again where we look for a reversal if that's set up. And you can see here we have another time where the market broke out of that level, and we look to see, okay, is that level going to fail? And then is it going to take a retest here and then sell off? And so looking at this, it does end up fail back in, and then it ends up making and you can see here, I'm again thinking about taking a trade here, looking at, okay, where my profit target would be. I would be going all the way back to the bottom, but that's totally fine. There's room to profit there. And then I end up hesitating again on that trade. And I end up, this time I actually do end up putting in a order, but it's too late. The market's already sold off a little further away than I want. You can see, oh, if I thought about if I get in here, where would that put me? That would kind of put me a little too far into the lows. And so that's something I don't want to take. And so the second biggest trading mistake is allowing your emotions to take control of your trading. A lot of people think the hard part of trading is having a strategy that works. And I think the hardest part about trading is actually just following your strategy that you know that is going to work consistently over time. I'm very confident in my ability to pick these reversals consistently. And it doesn't have to be consistently, right? It just has to be enough where my risk reward turns out to be positive in the long run. But for me, the struggle is actually following that plan consistently, right? Where I have a day or a week where I'm struggling and my confidence isn't maybe where it normally is, and I make mistakes like this. I get too worried and don't get in a trade, and then that kind of affects my next trade. And then a lot of times what happens then is if we go down, I will jump into a trade maybe either a little too early or make a trading mistake based on that. So when you're trading, you have to be aware of your emotional capital. And that is essentially your emotional strength of what has gone on throughout your trading session or just life in general. Where are you at in terms of being able to deal with the market and just effectively trade and control yourself, because you don't want to get into revenge trading if you get frustrated, because that is a really surefire way to blow your account up. If we jump into this next spot where you can see the market is starting to bounce off of the lows, and again, that's a spot where I want to look for a reversal. Now, first off, want to make sure this downtrend is broken, so we've got to wait for the market to do that. But then once that happens, I do want to get in. And sometimes in the past, I would tend to get in a little early if I was frustrated like this. Now I've got to where I can control that a little better, but that is something that can happen. And so I want you to be aware of that, just have that self-awareness. Start focusing on self-awareness when you're trading, because that is a very key part of when it comes to trading. So you can see here I got in on an actual trade. This is my first trade for the day. And one thing I do want to say is another big mistake is trade size. I was actually a little big on this trade because, well, the market was very volatile this week, and the swings here, you can see here's 4,100, and this swing all the way up here is essentially 60, 70 points. And so that makes it so my stop size has to be really wide here. My stop here is about 14 or 15 points, making it my normal sizing. I would want to actually reduce so I don't lose too much in a trade. And so that's a really big thing is when trading is you need to manage your size of your trades correctly, because if you don't have good size management, that is a very easy way to blow up your account. And that can either happen by, like this, for example, having a trade where it's a little too big. It eats up a lot of your profits when maybe, it shouldn't have. It should have just been a normal size loss. Or you end up trying to revenge trade and double down on a trade, make a trade really big, and end up blowing up your account that way, because you're either trying to just multiple trades that end up losing. You're just going after trying to regain those losses, and it just compounds on itself, making more losses. And that's why trade size is really important. And so what you want to do is have a plan of what your trade size is going to be. And if it depends on your stop size, then you need to have a plan of, so if my stop is 10 points wide, maybe I have 2 contracts, or if it is 20 points wide, then I have 1 contract that I trade. And so you want to be able to adjust that based on what the market's doing, if that's how you have your stop. You don't want the market to get so volatile and then all of a sudden you're trading really large trades. You want to actually scale down, because in those instances, the market can be even scarier and more intense emotionally. And so with this trade, I'll just fast forward a little bit. It got really close to working out, but I don't think there was any mistakes with this trade. This trade was perfectly good in my eyes. It's just the market ended up not working out, and that's just a part of trading, right? And of course, I have a rule where I don't manage a trade once I'm in it. And in spots like this, that can be frustrating when the market got very close to my profit target and quite a few $100 in my direction, and then it goes all the way and goes against me. But that's a part of trading, and you just gotta let those things play out. So you can see here my risk on this trade was about $300, and I like to try and keep it between 150 and 200 at the moment. And then my profits on my trades are 300 to 400 if I'm going 2x, and then more if I go 3x on those. So let's look at another trade example. You can see here I have some levels drawn. This is a big key level down here, and then there's some downtrends, and right now this downtrend is broken. And so for me, that's again my pretty basic setup of, okay, we're at a strong level that has a high chance of reversal, and our market has downtrended into it and bounced off of it and broken that downtrend. And so again, we're just going to look for some kind of generally head and shoulders pattern. And so you can see here, it's starting to do that. Now the market sometimes will pull here, pull back here more, or sometimes it'll just kind of sit here and chop before it takes off, if it does, of course. Sometimes it can just come up here, bounce, and then keep going down. The market can do whatever it wants at all times. But for here, this was a spot that this is that same week where I'm, really doubting myself and I'm not able to kind of get back in and focus up. And so it plays itself out in the sense of being too nervous to get in on this spot, because I'm nervous that, if I get in here, my profit target is, probably somewhere up here, I think. And we've been in a downtrend, right? That's hard about being a contrarian trader, is you're betting against something that doesn't seem likely all the time. And you just have to go with your trading plan and just stick to it. And the problem is that that's really hard to do sometimes when it seems like the market just wants to keep selling off. But that is the key thing about these levels, is that you just have to trust them, that they are good levels to go off of, and that the market is more likely to reverse from them. And that, yes, there is a level here, but it's also a smaller middle of the range level that I would say doesn't matter as much. The idea is with these larger levels is that they're going to have stronger momentum behind them. And so that if the market does end up bouncing here, that it's going to break through that level without much difficulty. Sure, it might come up here and struggle for a bit and then go up. And of course it could sell off, right? Again, the market can do whatever it wants, but the idea is that it's more likely to break that level because you're going with a stronger signal than one of these smaller signals that the market is creating. Again, didn't end up getting in here, and it worked out really nice. And actually, I ended up, and you can see here, I was thinking about it again. I ended up kind of getting in my head about, oh, well, maybe the market is gonna now fail off of this smaller level up here. And that's totally possible. But again, this is where you want to stick with your overall trading strategy. My trading strategy is going with these bigger levels and larger reversals in the ranges, even though I'm not going for the whole swing, and that my trades can be sometimes small in compared to the whole range. You still need to stick with that overall idea, because the bigger picture of the market here is, okay, the market's selling off, it's now hit this larger support level where buyers are more likely to come in, and that'll push the market higher. That is the idea there. Now, you can't switch halfway through the day and think, okay, well, there's this smaller level that maybe the market will now sell off here. And you can see here the market, my idea here was that, okay, there's a smaller level, we have a little uptrend, it broke, retested, and I got short off of that, betting that it was going to go lower. Now, this is a really nice pattern, but again, that's the key important part of having your trading levels and your support and resistance levels to be strong levels, because if you just go off of any little levels, then they're more likely to fail. And so for me, the underlying issue that really affects a lot of these trading decisions is the need to be right. I have an underlying need to want to be right every time I take a trade. And when it comes to trading, that's just not possible, right? You're going to make either mistakes or just that's just the name of the game. The market isn't going to work in your favor every time, and you're not really going to be able to accurately predict every trade. Some trades are just going to fail, and that doesn't mean that it wasn't a good trade. It's all about that numbers over the long period. And sometimes I let that get to me, and especially with making YouTube videos and having the pressure from that, I add a lot more pressure on myself of feeling the need to be perfect all the time and always know what I'm talking about, or always being able to execute everything perfectly. And that's just not possible. Everyone is going to make mistakes, and that's just something that I have to learn to deal with, and I always am getting better with dealing with, but it is something that adds pressure and increases the intensity of my trading. And so it's something that trading is always a game of improvement and getting better, and really self understanding and knowing what's going on in terms of yourself and how that's going to affect your trading. And so that's why I love trading, because it's such a self improvement game. And that's why I really like sharing these experiences, because I think that a lot of people really like trading as well. And a lot of people, I think, don't realize that how hard it is to be consistent on a daily basis. And I think there's fallacy out there that it's really easy, or maybe the experts make it seem easy. Even for me, there's some trading experts that I look up to that I think that, they have it easy and it's always go 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 for them, and they never have ups and downs. And that's not true. They have struggles just like anyone else, and that's just how trading is. So hopefully this video is really helpful in laying out some mistakes that I make, and hopefully that you can learn from those mistakes. Again, the big things are trade size, following your trading plan, and trying to understand and deal with your emotions in terms of how they're affecting your trading. And again, with trading size, always start out sim trading, because you are going to make mistakes when trading, and mistakes in trading is money lost.